risks and uncertainties identified under the caption Risk Factors in our annual report on Form 10-K and our quarterly reports on Form 10-Q. You may access Applied Digital's SEC filing for free by visiting the SEC website at www.sec.gov. I'd like to remind everyone that this call is being recorded and will be made available for replay via a link available in the Investor Relations section of Applied.
All right, guys, we're jumping into the Applied Digital earnings. Let's get into it.
Thanks, Matt, and good afternoon, everyone. Thank you for joining our fiscal second quarter 2026 conference call. I'd like to begin by thanking our employees for their dedication to delivering high-performance, sustainably engineered infrastructure for AI, cloud, and blockchain workloads. Their execution and commitment continue to be foundational to our success. This quarter marks several important milestones across our HPC data center and hosting business. Polaris Forge 1 reached ready for service, energizing 100 megawatts on schedule and completing the first of three contracted buildings. The remainder of this AI factory campus is expected to be completed by the end of 2027 and will host 400 megawatts for CoreWeave, representing approximately $11 billion in prospective lease revenue over approximately 15 years. We also announced a roughly $5 billion 15-year lease with a U.S.-based investment-grade hyperscaler for 200 megawatts at Polaris Forge 2. This is a $3 billion project near Harwood, North Dakota that is advancing on schedule, with initial capacity expected in 2026 and full build-out in 2027. Together, these agreements represent 600 megawatts of lease capacity and approximately $16 billion in prospective lease revenue across our North Dakota campuses. Having secured 2 hyperscale leases in the region, inbound demand has increased meaningfully. As a result, we are in advanced discussions with another investment-grade hyperscaler across multiple regions, including additional locations in the Dakotas and select southern U.S. markets. While there can be no assurance of future contracts, we believe we are well-positioned to begin construction of additional campuses in the near term. Hyperscalers are competing aggressively to secure sites that can support massive AI demand, responding to data highlighting significant shortfalls in global power capacity. Many are being asked to commit capital to 30-year power plant developments, meaning energy may take years to come online and could cost more than anticipated. Beyond the immediate rush, AI infrastructure is ultimately a cost of capital business where every input matters. In this context, we chose the Dakotas because we believe they provide a durable competitive advantage with low cost of abundant energy and climate, ample land for expansion of existing sites, and potential for future large-scale super sites that could align with regional energy developments, making Applied Digital sites not only immediately valuable, but we believe also more efficient and cost-effective over the long term compared with other regions in the U.S. and globally. Building on this advantage, we have significantly evolved our construction and design capabilities. Our current data center designs are modular and highly efficient, allowing us to run numerous concrete plants simultaneously and leverage prefabricated components delivered by 18-wheelers. The approach reduces construction timelines and lowers overall cost. We've expanded the footprint and flexibility of our buildings design to allow for different GPU and ASIC chip architectures and networking infrastructure to support multi-purpose AI use cases and traditional cloud workloads. While AI is driving significant demand, cloud computing continues to grow and increasingly competes for data center capacity. Our facilities are purpose-built to support training, inference, and traditional cloud workloads, intended to give hyperscalers maximum flexibility over the life of the asset. Looking ahead, we expect to maintain a meaningful competitive advantage in the Dakotas and intend to announce additional locations in other advantaged regions. With that, I'll turn the call over to our CFO, Saidal Mohmand, for a detailed review of our financials. Saidal?
Thanks, Wes, and good afternoon, everyone. This quarter represents a major inflection point for Applied Digital. After 2 years of construction and over $1 billion invested in our first 100-megawatt data center, we have now begun to generate lease revenues. We expect lease revenues to ramp over the next quarter, and it's important to note that we currently have 2 different campuses under construction simultaneously, representing 600 megawatts. These buildings are expected to come online over the course of calendar 2026 and 2027, where we anticipate meaningful revenue growth over the coming 18 to 24 months. This does not include any additional campuses currently under advanced discussions with customers, which would be layered into these numbers according to their respective design and build timelines. From a high-level finance perspective, we have agreements in place with top-tier financial institutions that allow us to execute this repeatable and capital-efficient framework. The first step of this process is to draw on our development loan facility with Macquarie Equipment Capital, which allows us to fund pre-lease construction for new sites. Subsequent to the first quarter end, we made our first draw under this $100 million facility. The second step, following a mutually agreed upon executed lease with an investment-grade hyperscaler, is to access the Macquarie Asset Management's $5 billion preferred equity facility. To date, we have drawn $900 million from this facility to support our Polaris Forge 1 and 2 campuses. We expect a similar financial structure will be used going forward for future development projects. This multi-layered financing framework allows Applied Digital to leverage third-party capital for a majority of the upfront investment while retaining majority ownership of each site, providing financial flexibility and reducing reliance on public capital markets. On the debt front this quarter, we completed a $2.35 billion private offering of our 9.25% senior secured notes due 2030 to finance the first two of the three buildings at our Polaris Forge 1 site, supporting the CoreWeave leases, allowing us to refinance existing debt. Note, project-level debt typically carries higher interest rates initially as it finances the riskier portion of development, but once the buildings are operational, our goal is to refinance at lower rates. Additionally, our team is actively exploring and working on options to reduce the cost of debt for the third building, ensuring we continue to optimize our capital structure. Now let's turn to the quarter. Revenues for the fiscal second quarter of fiscal 26 were $126.6 million, up 250% from $36.2 million in the prior year. The increase was primarily due to a $73 million of revenue generated from the tenant fit-out services associated with our HPC hosting business, along with $12 million of recognized revenue in connection with the commencement of the first CoreWeave lease at Polaris Forge 1, reflecting partial quarter lease revenue. On a cash basis for the leases, revenues were approximately $8 million. The difference between cash received and the revenue recognized reflects ASC 842 lease accounting, which requires lease revenue to be recognized on a straight-line basis over 15 years. We will aim to provide clarity on this difference on an annual basis going forward. Applied Digital's data center hosting segment, which operates 286 megawatts of customer ASICs across 2 North Dakota facilities, had an exceptionally strong quarter, contributing $41.6 million of revenue, up 15% compared to the prior year. This growth was primarily driven by increased capacity online across the company's hosting facilities. We are very pleased with this business, which generated roughly $16 million in segment operating profit in just one quarter on a $131 million asset base. Cost of revenues in total were $100.6 million compared to $22.7 million in the prior quarter. Approximately $69.5 million of the increase in the cost of revenue was associated with the tenant fit-out services for our HPC hosting business, while the remaining increase was associated with our data center hosting business and other expenses directly attributable to generating revenue. SG&A was $57 million compared to $26 million. This increase was due to an increase of $23.8 million in stock-based comp due to accelerated vesting of certain employee stock awards, $4.7 million in professional service expenses, primarily related to an increase in legal services, and $1.2 million in personnel expense for employee cost and other costs attributable to supporting the growth of the business. Interest expense was $11.5 million compared to $2.9 million, while net loss was $31.2 million or 11 cents per share. On an adjusted basis, adjusted net income was positive $100,000 or 0 cents per share. Adjusted EBITDA for the quarter totaled $20.2 million. From a balance sheet perspective, Applied Digital is exceptionally well positioned. We ended the second fiscal quarter with $2.3 billion in cash equivalents, and restricted cash versus $2.6 billion in debt, most of which does not mature until 2030, and approximately $2.1 billion in total equity. Note these figures do not include the $382.5 million in proceeds from financings completed subsequent to the quarter end. Our goal is to maintain one of the strongest balance sheets in the industry throughout the majority of the construction phases, intentionally holding a robust liquidity position to preserve a strong credit profile while enabling additional investments in equipment and new sites, then reassessing as buildings come online as our cash flow increases. With that, I'll turn over the call to Wes for closing remarks. Thank you.
Thank you, Saidal. Applied Digital is executing in a market defined by extraordinary hyperscaler investment, now exceeding $400 billion annually. With our first two hyperscalers under contract for 600 megawatts and additional sites in advanced discussions, we are well positioned to scale rapidly. We now expect to surpass our long-term goal of $1 billion in NOI within 5 years. The Dakota campuses are expected to provide a durable strategic advantage through low-cost energy, natural cooling, and a supportive regulatory environment. We remain committed to responsible development, strong community partnerships, and environmental stewardship. We continue to invest ahead of the curve. This quarter, we led and invested $15 million in a $25 million funding round for Corentus, supporting advanced liquid cooling solutions for high-density AI workloads. We are also working with utilities and strategic partners, including Babcock & Wilcox Enterprises, to explore ways to add power to the grid without increasing costs to our customers. These initiatives reinforce our leadership in next-generation data center design, responsible grid management, and a long-term shareholder value creation. We plan to continue advancing our thought leadership at the forefront of data center technology and deepening our influence across the broader ecosystem. I'm also proud to announce the launch of Applied Digital Cares, a community initiative funding grants that support education, health, innovation, and local development in the regions where we operate. Through this initiative, we aim to improve the standard of living in these focused communities because our success depends on theirs. Finally, as noted earlier, I want to expand on the board's decision to spin out Applied Digital Cloud. We've entered a non-binding letter of intent to combine Applied Digital Cloud with Exobionics to form Chronoscale, a dedicated GPU-accelerated compute platform for demanding AI workloads. This transition separates our cloud platform from our data center business, intended to allow each to scale independently with greater strategic and capital flexibility. Chronoscale is set up to leverage the proven Applied Digital Cloud platform, among the first to deploy NVIDIA H100 GPUs at scale. On an anticipated closing in the first half of 2026, Applied Digital is expected to own over 80% of Chronoscale. Today, the cloud business generates over $60 million in trailing 12-month revenue with $313 million in assets. We believe spinning off our cloud business best positions us to serve the accelerating AI market while enhancing long-term shareholder value. With that, operator, we'll open the call for questions.
Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star followed by the number 1 on your touchtone phone. You will hear a prompt that your hand has been raised. If you would like to withdraw from the polling process, please press star then the number 2. If you are using a speakerphone, please make sure to lift your handset before pressing any keys. Your first question comes from the line of Nick Giles from B. Riley Securities. Please go ahead.
Thanks, operator. Hey guys, congrats on all the progress. My first question was just, was hoping to get a sense for your growth appetite in the cloud business. Good to see the announcement there for Chronoscale. Should we expect the Applied platform to be a host for any future GPU purchases, or how could Applied ultimately help attract incremental customers for Chronoscale? Thanks a lot.
Thanks, Nick. We've had a lot of discussions around that. So I think one of the key advantages that Chronoscale will have is the relationship with Applied Digital and access to large-scale data center facilities. Deploying the accelerated compute, whether it be GPUs or TPUs or LPUs, is part of the equation, but having access to large-scale data center facilities to actually make those deployments is a bigger part of the equation right now. And I think that's going to give that platform an advantage, having the relationship with Applied Digital. We've had some of those discussions. We don't really want to get into how that will work in the future, but I do think that's a big advantage for the cloud business as it spins out.
Got it. I appreciate that, Wes. My second one was just, you signed an agreement for a limited notice to proceed with Babcock & Wilcox, and I was just wondering if you could touch on the opportunity there. What kind of optionality does this really give you going forward, and what should we be looking for in the upcoming contract release?
So for us, with the BW solution is a very unique solution and an exciting solution in the market because it uses older technology or an older process, which has been proven out for 100 plus years. It's using steam turbines. Think of coal plant boilers, but we're using natural gas. That company has actually made a lot of coal to natural gas conversions over the past decade plus. And what it allows us to do is go to market earlier. If you get in lines for traditional natural gas turbine right now, if we put an order in today, we're probably not getting delivery until 2031, 2032 for that equipment. We need power earlier than that. We are working with our utility partners, specifically now in the Dakotas, but expect to in other states as well. The initial reaction from those utilities has been overwhelmingly positive and really interested in the solution. That the utilities, any utility in the country knows who BW is. The company's been around for a long time, very, very good reputation. And for us to be able to bring a product forward, 3, 4+ years to be able to generate power in the near term is a big advantage for those utilities and for us. And I think you should expect to see more information about that in the first quarter as we proceed with a site and an actual schedule for build on that equipment. But it provides a really good option for Applied Digital to expand its current campuses and future campuses faster than we would be able to otherwise.
Got it. Hey, Wes, appreciate all the detail. Keep up the good work.
Thanks, Nick.
Next question comes from the line of Darren Aftahi from Roth Capital. Please go ahead.
Hey, guys. Yeah, good afternoon. Thanks for taking my questions and congrats on the progress. Two, if I may. Wes, can you just talk generally about the landscape for leases and how pricing may have changed over the last 6 months? Like, is it improving, staying the same, going down? And then second question, can you just talk a little bit about the pre-lease financing? I appreciate what it's actually doing, but what does that say about your confidence when you're progressing on sites where you don't have signed leases? Just any kind of commentary and context would be great. Thanks.
Sure. So I'll start with pricing, and Darren, I'll keep it specifically to us. I don't want to speak for the market at large. But I would say generally pricing has been stable to slightly better over the past 6 months. The demand profile for the past 6 months has been extraordinarily robust. I always want to expand a little bit on this with contracting. There's the headline price that you'll see in contracts and a calculated yield, which is using an estimated cost to build. That's one aspect of it. What I would say, though, that's as important or even more important is we're getting more favorable terms in other aspects of the contract that we focus on very acutely for things like cancellation, transferability, a lot of the things that make these contracts for us, much more rock solid over that 15-year time frame. And we're getting a lot more favorable treatment in those aspects. As an example, our current contracts are really non-cancelable for 15 years. The customer can cancel for convenience. However, they owe us the 15 years of payments if they do. So that's typically referred to as a make whole or a cancellation in the contract. So we've been able to get that 100% make whole transferability that doesn't allow them to have to transfer to a credit rating that's either equal or higher. There's a lot of things that go into the contracting. So I would just say in general that the contracting environment has gotten more favorable over the past 6 months. And then on the Macquarie equipment facility and us announcing that, I think you should think back to what we did for our facility in Harwood, North Dakota. We did something very similar, and at the time I spoke about that as well. As we will go forward with groundwork, breaking ground, getting the project moving when we have a high degree of confidence that we're going to sign a lease at a new campus or new campuses. And that's that facility. We use that same style of facility. Now we've made that facility effectively an evergreen so that we can continue to draw and pay it back. But we use that in Harwood. We paid that back with the draw on Macquarie Asset Management. We've now drawn down again. We've purchased some land and some other equipment. We'll start construction on at least one new campus by the end of January. And that's because we have a high degree of confidence that we're going to sign a lease with a new customer that is different. And we said investment-grade hyperscaler. It's different than the original one we signed in Harwood. And that's the goal for us. Darren, we have a lot of momentum. So we've talked a lot about this before, where we're qualified with most of the investment-grade hyperscalers. We're really focused on 6 companies total here. And so we want to add new locations and we want to add new customers. So we diversify both in location and by customer. And we expect to have a lot of success on that in 2026. And with what we're doing and what you're seeing, the actions are now, you should expect that we think it's going to be in very early 26.
Great. Appreciate the insight, Wes. Thanks.
Absolutely.
Your next question comes from the line of Rob Brown from Lake Street Capital Markets. Please go ahead.
Good afternoon. Congratulations as well on all the progress. Just back to the Chronoscale spin out. I think you said mid-year for kind of closing. What's the give us a sense of what steps have to happen between now and then in terms of getting finalized agreement and a closing step? What sort of has to happen here?
Sure. So it technically will be a merger, Rob, and so we'll get to a definitive, later this month or early in February, and then there will just be a process for a shareholder vote to complete the merger. I think in the first half of 26 is the expectation. I think if I were handicapping it on the very, very early side in March, but I would expect kind of the April-May timeframe as we go forward with that.
Okay, great. And then as you kind of think about that business and the growth possibly there, I think you said of 60 million trailing or 75 million. I think you've also said sort of prospective. What's sort of the growth opportunity? Is there additional capacity that can get leased out as a standalone business, or do you expect? I assume you expect some growth and capacity as well, but just a sense of the growth opportunity there.
Yeah. So just for context on this, Rob, when we announced back in April, we put that into discontinued ops. We're seeking strategic alternatives. We evaluated a lot of alternatives, but while we were evaluating those alternatives, I think that market changed pretty significantly. And what we're seeing is a big opportunity in the compute side of the market, obviously the data center side as well, but the compute side of the market, you're seeing a lot of deals happen over the past 3 or 4 months in that part of the market. We're involved with a lot of those counterparties and discussions and have been, and we think there's a really large opportunity for our cloud business as we spin it out into Chronoscale to get some of those types of contracts. And we working with us, we think there's a really unique relationship there where we can get data center capacity to be able to deploy significant scale for those style of contracts with those customers. And so we think this is the absolute best path for value creation for our shareholders to let this company spin out and capture that opportunity and raise its own capital and get on its own growth trajectory, which we just haven't focused on for the past 8 months. So we think there's a huge opportunity there, and you can see the stuff that's going on in the market, and we're really well positioned to capture some of those opportunities.
Okay, great. Thank you. I'll turn it over.
Thanks, Rob.
Next question comes from the line of Mike Grondahl from Northland Securities. Please go ahead.
Hey, guys. Thank you. You've mentioned a couple times advanced discussions. Can you talk a little bit about how many sites you're having advanced discussions about and like how many megawatts, just so we can get a feel, kind of a sense of the breadth that you're talking about?
Sure. I think we've talked about 2 or 3 sites. So I'll tell you, it's we're in advanced discussion on 3 sites and 900 megawatts.
Great. 3 sites and 900 megawatts. And then, Wes, how are you thinking about the pipeline today? How would you characterize that pipeline?
The pipeline remains robust. I will say, Mike, when I think about the business, and it's been like this for the past few months, I'm thinking less about the demand side of the equation. And I talked about this a lot on the last call, which is, our ability to scale. Our ability to scale across multiple sites and do construction across multiple sites, and how many sites can we do construction across. And the team spent a lot of time in 2025 and will continue in 2026 working on our ability to scale and execute these projects at the size that we're doing across multiple sites. So it's less on the demand side, because that's not been really the issue for us, or really I think the issue for the industry. We'll focus more on how much can we do, and how much can we build from a supply chain perspective, from a personnel perspective, on an annualized basis. And so I don't think demand is going to be the limiter for us, but I want to make sure, we always want to make sure that we're delivering on time and on budget for our customers. And I don't want to go too far out. We haven't hit that limit yet. But it's the piece that I think about a lot, and we internally think about a lot, is what is the limit for us on an annual basis? It's a large number, but that's really more the limiting factor for us, and not, what the demand picture looks like.
Great. Hey, thanks a lot.
Absolutely. Thanks, Mike.
Your next question comes from the line of George Sutton from Craig-Hallum. Please go ahead.
Thank you. Wes, you mentioned having been qualified by a few of the investment-grade hyperscalers. Can you just talk about what that means when we talk about being in advanced discussions? I mean, how much more simplicity of getting something across the finish line is there once you've gone through that process versus, hypothetically, someone new in the market?
Yeah. So what I would say generally, and I'm going to only be able to reference our experience. So getting onboarded, getting to the point where you sign a master agreement that governs, typically work orders or service orders you'll sign underneath of that, can be anywhere from, on the low end, 3 months, to on the high end, 9 months to a year. And so we've been through the process there for most of these hyperscalers. So there's the 6 that we target, which are the 5 investment-grade hyperscalers, and then CoreWeave. So we're through, out of those 6, we're through that process with 5 of those. And so I think we're in a really good position. And so if we've already been through that process, doing a new building, even if it's, a new building on the same campus, or an expansion in a current building, or doing even a new campus, if you're through that with one of those hyperscalers, is a much shortened timeframe, abbreviated timeframe, to get to that, actual contract versus starting from scratch.
Gotcha. So I want to put a couple of things together, and if you can help me. You were on CNBC the other day, mentioned, by the way, movie star quality experience, frankly. But you mentioned you had done $16 billion of deals in 2025, and that you would anticipate doing that or potentially better in 2026. And I want to dovetail that with what you just said on, we're late stage with 3 sites and 900 megawatts. Am I kind of putting these things all together correctly?
Yeah, I think that's correct. What I would just to add to that on the 900 megawatts, I don't want to set the expectation that all of that is done at the same time. That could be, one at a time. It could be none. We've been through enough of this. George, you've been through this with us as we've gone through the last few years. Nothing is done until it's done. That's just what we're working through right now. But that's those 2 going together. I think, you're reading that correctly.
All right. Perfect. Thank you.
Absolutely.
Next question comes from the line of John Todaro from Needham & Company. Please go ahead.
Hey, thanks for taking my question and congrats on the quarter. Wes, you spent a good amount of time talking about how, I guess, supply and execution is a little bit more of the difficulty part than demand. I think you ultimately ended ahead of schedule on that first build for CoreWeave. Can you just walk us through maybe what you learned from that execution and give us confidence in how you'd be able to continue to execute on those builds on the development side, and then have a follow-up?
Yeah. So we learned a lot going through that process on that first building, and we've made a lot of refinements. Typically, John, I think you've probably heard me talk about this before. So for us, one of the things I think differentiates us in the market is, we started on this path back in 2022. We've stubbed our toe in a lot of different ways through the years. Luckily, we did most of that at a very small scale, but we had a lot of lessons on that first building, and you see that reflected in design change and then construction change and how we operate all the way through our supply chain and standardizing, a lower amount of SKUs, lower amount of suppliers, all of these things that streamline the process that we do to build these facilities. And so we feel like we have a really good handle on our construction timelines. There's always things that can, cause a problem that are out of our control on construction. One of the things I always, worry about is weather. But we've built, I think this is our fourth year in a row building in North Dakota in the wintertime, so we're pretty accustomed to that as well. But we have, we went back securing supply chain, well over a year ago, 18 months plus ago, and we thought we were really forward thinking on, locking in, 600, 700 megawatts of MEP per year that we have for us. Now we're working to expand that. That fits what we're doing right now, but I think that needs to go larger for us. So, but we feel good about our processes we have in place and kind of the maturation of the construction and development group versus what we did on building one. I'm proud. I'm really proud for the entire team that we delivered that on time and on budget for our customer. But we have to continue to do that. We feel really good about where we are for the CoreWeave building that we're expecting to deliver in the middle part of this year, and the building in Harwood we're expecting to deliver in shortly after that, and then the next two buildings after that, both in Ellendale and in Harwood. So we're feeling really good about where we are on schedule, but it's about the fact that we have streamlined this and we're on what I call our fourth generation design has really helped us in simplifying the process and streamlining the process and being one of the companies that does deliver on time.
That's great. Thanks for that. And then just a quick follow-up. I think you mentioned in the past getting calls from entities with sort of stranded power, and it sounded like there might be a little bit more pockets of available power out there than some of us in the industry had initially thought. Could you just maybe frame that up? Is there still additional kind of pockets to acquire more fairly near-term power, and maybe talk to your color on that?
We keep finding more opportunities, more and more opportunities. Everything we're in process with right now is organic. So we have a large amount in flight that is organic. But we continue to see opportunities, third-party opportunities. We continue to evaluate those opportunities. And some of those, really for us, it's, could be in a different, geographic market for us that is a really attractive market. But we continue to look at that. But everything we're doing right now is organic, but we see those, I would say daily, weekly at least, but typically multiple times in a week.
Great. Thanks for that, guys, and congrats again.
Thanks, Sean.
Your last question comes from the line of Michael Donovan from Compass Point. Please go ahead.
Hi, Wes and Saidal. Congrats on the quarter. Following up on Mike's pipeline question, can you touch upon expansion opportunities at PF1 and PF2? Do you still have confidence in those reaching 1.4 gigawatts and 1 gigawatt respectively? And I have a follow-up.
Yeah. So every one of our campuses, I think that this is an important point. Every one of our campuses has the potential to go to at least a gigawatt, and some, significantly beyond a gigawatt. But when we think about our goals inside the company, we have 2 campuses now, that can each go to a gigawatt or more. So we have that pipeline in the future for ourselves. And then we're working on, 3 additional campuses. We're working on a lot more than that, but think of it the things we're in advanced stage on, 3 more campuses. Each one of them can scale to 2 gigawatt capacity. So for us, if we put those in place, those contracts in place, we have different customers on those campuses. We have a view and a pretty clear path to, whether it's by 2030 or 2031 or 2032, to growing our capacity to 5 gigawatts if we don't add another campus after that. We would expect that we would, but it puts a really good growth path out for the company, just having these campuses in place. That, just getting to 2 gigawatts, if we were talking about this a year ago, would be, monumental for us. But if we can expand to 5 campuses and have a clear path to 5 gigawatts plus of capacity, over the next 5 years, that's a really great position for the company. But all of those campuses have that expansion potential.
Great. Appreciate that. And with the discussions around NVIDIA this week with liquid cooling for Vera Rubins, can you discuss a bit on what makes Corentus a competitive solution?
So for Corentus is a really interesting. You could go and look at their technology. They had a very nice announcement with Microsoft, I think a couple of months ago. What we like about it is Corentus has a cold plate technology that I liken to semiconductor and then module. A lot of semiconductors are built into modules. So they have the technology that I would classify in this case like semiconductor, which is a specially designed patterned cold plate that is dependent on each chip, individually. So whether it's B200, B300, Rubin, whatever it might be, they map that chip, they map the heat points of that chip, they design the cold plate with a lot of micro channels through it, and then it goes into a full cold plate, and it sits on top right now. But this technology is designed to go inside the semiconductor packaging in the future, and then actually inside the manufacturing process in the epi for the semiconductors. And the goal for this technology, and a lot of this is proven out for them, is that you can use, if a chip goes, say it's using 1 kilowatt now, but the next generation chip uses 3 kilowatts or 5 kilowatts, this technology can use the same amount of liquid to chill chips as they go up. Now there's a point where that breaks and there's a change where they'll need more liquid. But from a data center operator perspective, when having that efficiency inside is always great for our customers, but to be able to deliver the same amount of liquid on the data center side for a chip that's 3x the power density of what we're currently running really helps us future-proof our infrastructure. And so we're really excited about that technology. I don't know.
Thank you. There are no further questions.
Okay.
There are no further questions at this time. I'd like to turn the call back to Wes Cummins for closing comments. Sir, please go ahead.
Thanks everyone for joining us for our Q2 earnings call. I appreciate all of the support and look forward to speaking to you in April. Thanks.
Ladies and gentlemen, this concludes today's conference call. Thank you very much for your participation. You may now disconnect.
Okay, so we see them come in with some earnings that were very good, and we saw a growth in their revenue. Things looked very good over the last quarter. You could see that APLD did have a correction down. We see some manipulation here in the first few minutes after they just reported earnings. So what did the earnings come out with? Well, we entered into this trade, resized, and we're in it right now. And you can see that here. But what they came out with from a reporting standpoint is they really narrowed that net loss. They came in with increased revenue, so the revenue did explode. You could see them jump into $126 million in revenue this quarter, which is huge given that they are just starting to convert the contracts into real cash. So that's exactly what we get to witness here as they build out their revenue from building and constructing the data centers. Now the losses are also kind of collapsing. We see that that's actually good. They actually have some growth in that area as well. Okay, and we see some growth related to the EPS loss being down about 82% there, which looks good. And the consistency of the company has been fairly impressive. We just see these earnings come out here. You could see the net loss there, down 82% from prior year, and the revenues up to 126 million. Again, that's why they are looking good in these earnings. Now, of course, you see the manipulation or a little bit of a, I guess, surprise because, while they had some really great earnings, they also just came in with what you're watching right now is that they sold down. Now, I'm not predicting that they're going to reverse back up right now, and I'm not predicting that, we're going to see things reverse immediately. However, the correction from earnings, all you can do is play the process, really. That's what we got going here. So we got some risk management. We got to stop in here around that 28.50. It's where most people will fail getting in after earnings, right? The truth is we're not focused on being right. In fact, to start this position we entered, we were down, I don't know, $200, something like that, resized, doubled down. But it's important to be prepared. Okay, so is it good to buy right after earnings, or is it good to enter into the stock after they just came in with really great numbers, really great numbers? You just want to be fully aware there's some short-term manipulation happening. You can't ignore it, and it's not unexpected. This is actually what we're anticipating. I can see in the comments you guys kind of planned for that, but you're also saying manipulation on the earnings is good. That's what Joey says. So this is the part of the trading where you don't see this on social media much, but it's kind of a waiting, the discipline, the calm, just going to be in here for the next few minutes. We'll see how this position kind of goes. There's a 3-day rule for Durante as he's saying, want to wait. But let me ask you something here. We went into the earnings a little bit here, increased revenues, right? If you believe that discipline matters, and it's not just all about the excitement of earnings, you believe the risk management matters more than the predictions, then the question becomes, why would you make those trades alone? You see, most people don't fail because they have bad information. In fact, you could have great earnings and still see the stock fall. They fail because they don't have the structure that they return to when the emotions show up. So I know a lot of people get emotional and you see the stock sell off after earnings here, just about, 5% or 4% momentarily. But, that's why I'm trading live right in front of you guys. I'm not here to prove anything, but I want to demonstrate to you how professionals think while uncertainty is happening. Because we could enter a trade at the top, at the bottom, it doesn't matter. If you've entered a trade and you immediately felt doubt, or if you've ever exited too early or held too long, it's not like a lack of intelligence. I'm not smart for doing this right now. It's just a lack of structure. That's why you got to manage the risk and plan accordingly. So with this dip down here, again, I entered here. We're looking for it to recover back up into this $32 range. And right now, I see there's hundreds of you guys here live. Thanks so much for tuning in. But not because you guys are looking for something like a hot tip on APLD. You're probably here just to kind of understand how the decisions are being made in the company. And that's what we found. We found some increases. This is where you get separation, is understanding these earnings very well. The earnings came in with more revenue, which means that contract is getting converted into all the contracts into real revenue. Very good. Okay. And this is also when things get crazy like this is exactly when I use Prophecy AI, right? It's not a signal tool. It's not necessarily a prediction engine, but it just helps with the thinking framework. So let's pull up APLD. You can see some of the projections here. So Prophecy AI helps me think clearly because before the trade, I could stay grounded during that trade and review objectively after the trade. So Prophecy AI, we're using Grok here. You can see some of the projections. You can see over the next day, anticipating jumps up into that $31 range. Now, this is very important, guys. It's not about just guessing, here's what to buy right now because it's right after earnings. It's about kind of helping you see what matters here and what doesn't. Identifying the levels, having clarity around this is important. That's where the emotions get to lose their power. Okay, when you have clarity here. So it's important here. You can see the earnings. We see some growth. If you guys are watching this right now, we're in a trade here on APLD. It's just about $40 profit right now. If you want this level of clarity when we're investing every day, this is exactly what Prophecy AI was built for. So I'm going to leave the link down below for you guys if you want to have a look. It's okay if you're not ready, no worries at all. But if you've tuned in for any amount of time and you've been wanting to use predictive analytics and you're committed, then I'll leave that there for you guys. You can go to cash2assets.com/themachine and you get 1-year access for beta as we're rolling out. But let's get back into the chart here. So outside of this analysis, you can see that the growth is kicking in after some of the dips we just saw in APLD. It might even be more volatile. But this is where you got to have moments of discipline. This is where you want to be, you want to see what we're witnessing right now is a large correction, or not large, but fairly good correction after their earnings. So if this resonates, if you guys are enjoying the live stream, everything else, comment the word clarity in the chats. And I share this because I hope you guys can focus more on prophecy, more on the process, than just making a profit right away. So does that make sense? Everybody get this? Everybody's got it? Appreciate you all. Thanks so much for tuning in. Again, we're trading APLD. We're going to be seeing this recovery here. Exactly what we're looking for is a recovery back up into this $32 range. So not a prediction, just a process. We got some risk management around this $28.50, which we did see it slide. It was a little scary there. How many of you guys saw me down $100, $200 and you're saying, ooh, Will's down right now? But we had our risk management in place. We kind of resized, get back in it. Now we're in APLD, anticipating what potentially could be a 9% recovery. Now, it was just earlier today, they were up around $32. That was about 10% difference from current prices. It's not about predicting they're going to surge back to $32. It's about having the process in place. And if it does take place, then we're able to yield that profit. So if that were to happen right now, we'd probably see somewhere around a $500 to $1,000 profit on APLD. So we'll be watching that in the short term. Now, I do see some comments. See the clarity comments. Awesome, guys. Good to see you here. Max says long-term, guys, the more boring, the better. Noticed that there was just a new price target of $99 the other day. That's awesome. We do have long-term in this stock as well. We've been covering it since about $3 a share earlier last year, a little bit after that. So we do see this move. But you can see the entry here with the good earnings with over $100 million in revenue. Their next target is going to be up into this $40 range. It's about a 40% increase from here. We just entered this short-term trade on the stream, and we will be watching it throughout the day as we're anticipating what could be the initial recovery here of about 10% up into that $32 range. Prophecy app, it seems to be fairly agreeable, anticipating slight corrections in the next hour, but anticipating that it's going to get up into that $30 range over the next few minutes. That's why we're going to stay up to date there. Appreciate you guys. And one other thing to consider, how many of you guys are excited about the revenue coming from the contracts? This is really important because the guidance that they have, yes, it's very strong, Ibrahim, it's very strong. And the conversion from cash or from contracts into cash was very clear here. Revenue's up to $126 million, and that is up 250% from the prior year in the comparable period. The net loss, $32 million, down 76%, not so bad given the increases in revenue. They also saw some increases in their balance sheet as they continue to grow on the income statements. Things look good there. Everything's looking pretty jolly here for APLD, except for the share price. You see the share price dip down a little bit after hours. So once again, that was the dip that we just bought, and we'll be watching it here throughout the rest of the day. Do you guys got any questions, things you're thinking about that you would like me to go over here? Or are we pretty clear about the revenue? Again, $15 billion in contracts starting to convert into revenues. We see it get into their earnings and show up here. The risk to reward that we have on the current trade, while it's a short-term trade, is going to be right around this $28 price point. Again, I hold it long-term, but we also do have a short-term trade that we just entered into. So you got that $28.50 as kind of a stop loss potential there. And then you can see, you know, in this trade that we're in right now, as it's starting to trend up slightly, that we're just kind of waiting. It's a waiting game right now. Things are moving, not drastically, but they are moving upward, and that's the recovery from what could be an overreaction. Happens almost always. Didn't we talk about this yesterday, right? We talked about this, that and Ibrahim says a nice question there. We'll get into that. We talked about this, that whatever price that it reaches right after earnings most likely won't be sustained for a long period of time. That's why I didn't buy right before earnings on APLD, because right after their earnings report came out, they dipped big time. We kind of waited and waited. We got in, had to do a little bit of a resize there and get into a short-term trade on APLD after the dip on the earnings. And now we're watching it currently, anticipating that that was kind of the reaction, the negative reaction. Saw some institutions sell off. However, they came in with groundbreaking earnings, increased revenues, which would anticipate the stock's going to do better in the future. And that's why we ended up trading it. So we're up about $121 here with you all here. Yep. And it's looking fairly bullish, up to about, let's see, $30 a share over the next day, according to Grok. Let's get a look at OpenAI as well. OpenAI is very bullish on APLD, anticipating it's going to be up into that $32 range here by February. Let's see. OpenAI's got some more bearish sentiment compared to Grok into the next 3 months. Yes, interesting. Things are looking amazing on the earnings, though. They came out with some great numbers. Great numbers for APLD. And I was just on the phone with an investor last week, and they were really concerned and getting ready to sell APLD because they were only looking at the financials. And it's funny, people only looking at the financials would be led to believe that they're way overvalued. But then when you look at the contracts and the news, and then you look at the financials, you say, oh, well, all of these contracts were recently signed. They're probably going to increase their revenues and increase their balance sheet. You know, that's kind of what we are led to believe. Now, it's not always perfect that we're were right. We started this trade off down, and it's been volatile. This short-term trade here, it's between $80 and $150, and it might be negative 80 5 minutes from now. Who knows? But we'll have our risk set here. But nevertheless, the revenue showed up. The revenue showed up, and we see them increase in the earnings. Over $100 million in the quarter is not a small amount for this company. That's their best ever quarter as they increase and turn those contracts into cash. Pauline, thanks for tuning in. And this is why I've been using the Prophecy app as well. Really does help out with these types of anticipations. Ibrahim, they mentioned while there can be no assurance of future contracts, is that a negative guidance or legal language? No, I mean, it's like the same as us being on the call here and you hearing the words, this is not a prediction. I anticipated, I would expect it to go up. I expected them to have good earnings, but I'm not going to sit here and predict and tell you that this is 100% true. You must go buy it, because it's just not good integrity. Because BlackRock decides to sell even when they have great earnings, you just don't know. So that's why he would say something like that. You can't guarantee something, or you can, but how would you feel from a place of integrity? Do you feel that you're really having integrity? And so that's really what it comes down to. And that was my favorite part of the whole call, is when he said, yeah, we would be led to believe that we're going to see increased revenues and that these contracts are all going to go through and things like that. But he said, but a deal's never done until the deal is done. And hey, it's the truth. Maybe you want to hear him say, yeah, it's going to go through for sure. It's going to be good. But then what does that do to him when that deal doesn't go through? That looks terrible. And so it's just having some foresight. The other thing that you heard them talk about was the quarter, for the next year, for the next 2 years, talking into the future. And that's what you want to hear from a good steward and a company that is forward looking, and they're looking into the future. They say measure of your success is how far in the future you plan. Some people don't know what's going on tomorrow in their portfolio, while others are saying, yeah, 6 months from now, I'd like it to be like this. A year from now, I'd like it to be like this. And the same thing is true in business. And by having that plan, by having that goal, it makes all the difference. SMP says holding some APLD since $8.20. I'd love to see that. Nice work. Hi from Japan. Wow, I'd love to go to Japan sometime. I haven't been there yet, but I will. Sounds amazing. Thinking in the next year or two, we'll make our way over there. I've actually wanted to go ski or snowboard in Japan. That's what I want to do there. That sounds amazing. So appreciate you all, and do comment where you guys tuned in from. It's amazing. Thank you guys so much for tuning in again. I always am amazed at all of the investors. We have investors with net worth of 7 figures, 8 figures. Here we have investors that are just getting started. They're brand new, and that's the amazing part. And I hope, as a result of watching the channel, you guys are making more money. You're seeing more growth in your portfolio, which gives you more freedom. It allows you to think less about having to work every day for money, but you have your money working for you, that you have more time for things like your family, the things that matter, what you actually want to do, more freedom. That's really what it's about. So I hope that, all the stocks, while we have on the right here, I don't know if you guys could see here on my portfolio, but we just passed today. We added a few more. We have over 5 stocks, almost 6, almost 7. We're almost there. In the last 6 months that we have had reach over 3 digits in percentage points. So over 100% gain. And you guys see it right here, and I share it right in front of you, and I have my positions right here. because it's important to me that not that you copy me, but that you know that I'm doing it, and I'm doing it right in front of you, and that I'm not here to tell you to do so and so or buy something for any other benefit than for you, right? I believe that if I help enough people get what they want, I can have everything in the world that I want, and I live by that. And so that's why I wanted to go live here today. Hopefully it's been a helpful session for you all. We are, again, on APLD. We're in this trade here live. It's been rocky. It's been shaky. We were down. We're up. We're up $162 here since starting this live stream, and we'll see how it goes. But again, appreciate you all. Tim is from Mars. Thanks, Tim, for the comment. You got NYC, you got Austin. I've never been to Austin. I've always wanted to go, and I've never been to NYC. I've been to Dallas. Sweden, amazing. I love it. Appreciate you all. Okay, so what we'll be doing in the short term is watching this trade from this $29 entry. And what happens almost every time when we get into these trades is we don't know exactly the perfect prediction. I can look at the Prophecy app and I can look at these projections and say, this looks good. Let me use this to help me make a better decision here in the short term. But ultimately, we don't know. You know, you could have some buys, some sells. And what you want to do is you want to have a plan. So short-term entries, short-term plans are important. Long-term, we don't do anything here. I'm going to continue to hold this company in the long term, as we love to see them double their earnings, grow 250% in revenue year over year. It's amazing. In the short term, I'm going off Prophecy here. You can see the same technical analysis we were running that looked a little janky earlier. It was like moving so fast. Some of you guys saw during the earnings call, I'm moving my charts around. We're like, here's a support, here's a support. All right, that's broken. Now that's a resistance. We're moving everything around. It was hilarious. And so we'll be trading APLD throughout the rest of the day. Again, I'm going to hold it for now, but we can go ahead and move a stop up on the short term. So what I'm going to do, I'm just going to essentially click drag this. Let me see if I can how do I do this? Stop, maybe I can move it. Anyway, I'll be watching this. We'll set our stop here. But I do have a phone call here that I have to take, guys. I appreciate you all. Hey, Ryan, just give me 1 second. And so we'll be trading APLD. If you guys want to watch me trade live every day, Monday through Friday, we are going to be there at Market Open live, and you get a free t-shirt along with technical fundamental analysis, the top analysis and targets for the week for AI, data center companies like APLD, space and quantum, and much more. If you want to tune on in tomorrow, as soon as tomorrow, it's the second link in the description down below. Would love to see you there. You can see all of our entries, see our exits, and simply take a look at the second link down below to get started. If I earned your thumbs up, hit the like button. Do consider subscribing. And I see some subscribers here from Turkey, from Hawaii, South Korea. That's amazing, guys. And I'll see you guys in the next one. Take care.